I'm Darius McDermott from Chelsea Financial Services. Today I'm with Andy Brown, who works on the Japanese team here at Baillie Gifford on the elite-rated Baillie Gifford Japan Fund. Andy, there's been a lot going on in Japan. Most recently, the move to negative interest rates. What impact has that had on the Japanese market?
Well, in the short term, it's signalled a loss of confidence. Markets have been weak, particularly shares for Japanese banks, and rather unexpectedly, the Japanese currency has strengthened, which seems somewhat unintuitive, given that the purpose of this was a form of stimulus. Looking further ahead, the impact may be more positive. Certainly, if one looks at some of the trends that we're beginning to see unfold, one being that Japanese households are actually starting to borrow more in terms of mortgages. I noticed the other day that the leading banks in Japan reported a surge of mortgage applications in the year to February, for example, just after the negative interest rates were announced. We also may get an increase in consumption longer term, but that's very difficult to tell. But certainly from our perspective, it does reiterate the lack of attraction of the major Japanese banks, which already make very low profits, and we don't have any exposure to that area within the fund.
Abenomics is the sort of name commonly given to the sort of change in economic policy under the President Abe. Do you think it's working? Is there any evidence that this really is making a difference?
It's very difficult to assess such a broad topic as Abenomics in a short period of time that we have today. But I would make a broad observation, and that is that Abenomics it's working out much better for Japanese companies than it is for the Japanese economy. So what we haven't seen is a return of the Japanese economy to a sustainable growth path. But what we have seen is Japanese companies making changes, and we have seen Japanese corporate profitability improve. And the one area that I'm most excited by is corporate governance. And here we really are seeing significant tangible changes. Japanese companies having been put under pressure from a number of different angles with the new corporate governance code, with the new stewardship code, with a new index, which was announced a couple of years ago, that asks Japanese companies to generate higher returns on equity, among other qualitative criteria for inclusion. Companies are looking at their businesses in a very different way, and I think we're at the beginning of a serious trend here, and it could have a significant impact on Japanese companies' profitability and returns to shareholders over time.
And sort of looking ahead, the rest of 2016, do you see sort of great opportunity within Japanese equities, or are there any sort of standout threats that are on the horizon?
I think there are threats. One threat is that this weakness in demand across Asia, which broader Asia represents about 50% of Japanese exports. If that persists, that is unhelpful. Another threat is that we lose this sort of positive inflationary momentum that we're beginning to see, and a second increase in the consumption tax would be unhelpful in that regard, although I think that's actually quite unlikely to take place. But we're seeing lots of opportunities. And actually, as stock pickers, it's a particularly interesting time to invest in Japan. And what we are seeing in particular is that growth businesses, higher quality businesses, have been heavily derated and in many cases trade on similar valuations to the average business. So for us, that gives us excellent stock picking opportunities. It's a really fertile ground. And particularly any business that has exposure to China, any business that has some element of exposure to the capital cycle has been heavily derated, particularly in Japan relative to other markets, giving us really good opportunities.
Thank you very much, Andy.
Thank you.